Are you tired of not being able to sell your home for the price that you want? Are you ready to buy a house, but the interest rates are making it impossible? Do you find yourself saying, I'll just wait until the rates and prices come down? Well, today I'm going to offer some solutions to these dilemmas right now. By the way, be sure to stay to the end of the video where I will be offering 5 tips regarding buy downs. Okay, let's start with you sellers. Yes, rates have almost doubled this year, and yes, rates are expected to lower next year, but in the meantime, you sellers need to do something to get buyers to look at your home so that you can move on with your life. A possible solution for you is the 2-to-1 buy down. Now, buyers realize that prices are coming down, so that objection has decreased somewhat, but it's the doubling of interest rates that's pricing them out of the market. So let's fix that problem and get your house sold. Back in the good old days prior to COVID and the insane bidding wars and daily price increases, sellers used to offer buyers help in paying their closing costs. Typically, the seller would be amenable to paying a portion of the buyer closing costs, which are in the range of 2 to 3% of the purchase price. This motivated the buyer to close and kept the purchase price higher for the seller. With a 2-to-1 buy down, the seller offers that same 2 to 3% specifically to buy down the interest rate the buyer has to pay. If the seller makes it very obvious in their listing that they're willing to do this, then that will attract more buyers to their home. Realtors need to get the word out to their buyers to look for these types of listings, and this video should help in that effort. So how does the 2-to-1 buy down work? It's very simple. Essentially, the buyer's lender is offering a discounted rate to the buyer for 2 years. As an example, if current 30-year mortgage rates is 6.875, then the buyer would only pay 4.875 the first year, and then 5.875 the second year, and only in the third year would they move to 6.875. The benefit to the buyer, obviously, is that they pay less per month to buy your home at the price you want to sell your home. Most often, by the time the buyer hits the third year, they'll be able to refinance to a lower rate. Now, the amount the seller can contribute is limited by how much the buyer is putting down. The latest amounts that I have seen are that the seller can contribute up to 3% if the buyer is putting down 10% or less. They could contribute 6% if the buyer is putting down more than 10%, and they could contribute up to 9% if the buyer is putting down more than 25%. Now, it's important for everybody to double check with their lender to verify these numbers because they can change at any second, especially by the time you watch this video. So the benefit to you, the seller, is that you can motivate that buyer who's sitting on the fence waiting for the rates to drop, and you can sell your house now. Remember, sellers, if you contribute 3% to help them buy down the rate, you would be giving them what was a normal seller concession pre-COVID, and how much has your equity increased since 2019? Here is a biggie. Helping the buyer with a buy down today is usually less expensive than lowering your price a couple of times. Many sellers have dropped their price more than 3% since last summer. All right, buyers. I keep hearing buyers say that they want to wait till the rates come down to buy a house. Well, this is a rational idea, of course, but there are thousands and thousands of buyers in Utah saying the same thing. So what's going to happen when rates finally come down? There will be a huge pent-up demand for folks who have been waiting for a year, and you will have to compete with a dozen buyers to buy the home that you want. As Yogi Berra once said, deja vu all over again. Very similar to what you experienced in the last few years. Bidding wars will start up and prices will go back up. Instead, I propose that you look for homes that are advertising in their MLS listing that they're willing to buy down your interest rate. Here's a good example for you, and again, check with your lender for exact numbers. These are just estimates. So let's say that you want to buy a home for $500,000. In this example, the monthly payment, property taxes, and property mortgage insurance at an interest rate of 6.875 would be approximately $3,400 a month. If, however, you had the seller buy down your rate in a 2-to-1 buy down, your payment would be about $2,800 per month for the first year, and that's $600 savings per month. And then your second year payment would be about $3,200 per month. What that means is that you would get to keep in your pocket about $7,200 the first year and about $3,700 the second year. You could use that money to fix up your new home to make the home yours. Or you could buy a home sooner and not have to wait a couple of years to save up more money. As home prices normally go up about 6 to 10% a year in the Salt Lake area, you can see that buying now and refinancing in a couple of years makes sense. Remember, be sure to go over these numbers with your lenders as programs change, but now at least you have a general idea of how the program works. Next steps. There are other programs such as a 3-to-1 buy down and a 1-to-0 buy down, but the most popular seems to be the 2-to-1 buy down. I personally like the 2-to-1 buy down much better than a standard variable rate loan because you're working with a fixed rate and a buy down, while many variable rate loans are often tied to the prime rate, which has been increasing quite a bit of late. For example, I bought a home in the early 1990s with a variable rate loan, and I sweated every time the prime rate went up. Okay, here are 5 tips. Number 1, talk to your lender now. Find one that has experience in buy downs. Call me if you need a good lender to talk to. 2, find out the max home you can buy at the current rate, but realize that you will actually be paying hundreds less per month with a buy down. Number 3, look for homes that are advertising that they will be offering a buy down. If you don't have a realtor, I can help you with that. Number 4, don't freak out about the interest rates. Historically, they're in that 4 to 6% range with short blips over that. They tend to come back down to that historical range. Number 5, sellers. Make sure your realtor knows how to market this financial incentive to the buyers. It could mean the difference between you having to lower your price, even more, and selling fast. Be sure to check out my video on getting your house ready to sell and call me anytime if I can help you. Thanks and have a great day.